Alrighty, my name is Nick B, and let's get into this week's futures overview, starting with the calendar real quick. Monday, there's no news. Tuesday, no news. Wednesday at 1:01 p.m., we have the 10-year bond auction. Thursday, we have unemployment claims at 8:30 a.m. EST, and the 30-year bond auction on Thursday at 1:01 p.m. Friday at 10 a.m., we have the consumer sentiment report and inflation expectations. All right, so the meat of the moves are going to be towards the middle of the week, but let's go over kind of what happened last week and talk about really mostly the techs. I know there were the fundies that came out, but I'll be honest, we'll brush up on that a little bit. But the meat of the moves for me was the techs of it. All right, so let's start with ES, and you could see here I have a bear flag pattern that, in theory, was supposed to continue breaking down through this corridor right in this area right here. Look at this nasty candle. We went from 50.37 on ES up towards 51.21, could not breach that area, came back down. But regardless, we're unable to break that support to make new lows and ended up bouncing, which turned into a big old bear trap. Sorry, guys, gotta mute that. With that said, let me clear the chart and let's go over kind of what we see now, because it's definitely going to be a different kind of layout. So starting with the 3-year weekly, and this was also something we used previously to kind of call out that 5,000 level support on ES and the 49.60 possibility of ES dipping down to there. And we were really focusing, well, I was focusing on the 20-day weekly exponential moving average, as well as we had our previous all-time highs right here at 48.08. So I figured if we do come down to the 20-day and the weekly ends up closing on it about 2 weeks ago, if we can end up closing below it, most likely we'll see more downside. But that's when we saw that bounce off of 49.60, 49.61 roughly. And now here we are. Looking at it on the weekly, again, judging by the next wick we have at 52.14, which most likely on the smaller time frame is a previous lower high. We'll take a closer look at it, but my guess is if this weekly candle can get above 52.14 and we can stay above that into this week, we'll probably hit our targets of 53.33 and above 53.33 and a half. I'm most likely going to be targeting 53.50, 53.80, and then 5400. So that I know with a guarantee. And we're gonna break this down to the smaller time frame. So let me just make my alert. Because I know once that breaks, we're going higher. Of course, let's narrow down now supports in case we do end up coming down to the 20-day on the weekly. Let's consider where that might be. 50.33. Okay, fair. And we have this 49.61, 49.60 area that was our support. So I'm going to go ahead and plot a support right on it, because now, considering this is our floor and we understand that we're still range bound, but we understand that if we can get above 53.33, we're going higher. And then if we end up breaking down, the floor of 49.60, which we could not pierce aggressively, we're probably going to head down to the 50-day. We're going to target our previous higher lows, and it comes down to the areas roughly of 47.62. I think 4800 really. And then when you consider the fact that 10% below 53.33 and a half comes out to 4800, that would be a perfect target to the downside and possibly bite on a long or buy hand over fist in those areas, because you know unless something really bad is happening out there economically, which we kind of don't see right now yet, I don't expect to see it. I'm seeing a lot of fear mongering headlines and stuff. That's all noise. You guys understand. I don't really look at the macros most times because the techs are right. And going into last week, the targets of our levels were correct. The execution needed a little bit of work, and then we're going to talk about that later. So going forward, I understand now these are my floors for direction. Let's break this down to the daily and let's take a look at what we can find happening here. Okay. Now, one thing also, it's not that I don't like drawing trend lines. I feel like it's just you're waiting on this trend line to break or bounce, and in most cases, at least for what I'm looking for in trade setups, I'm very black and white. It's either a breakout or a breakdown. Personally, that's just my style. I prefer trading momentum breakouts. I understand now if we can hold above these supports now, it's going to be a buy the dip scenario, and I'm gonna definitely be trying to buy these dips. So let's see kind of what needs to happen for us to get an idea of what direction we'll take on into the week. Again, minus whatever macros we have lined up for the week. So okay, so on the daily, I'm not drawing a trend line, but I see these session highs right here. I'm going to leave this alone right now because, let me see, this was a previous higher high at 5160. We needed the breakout of 5167 to continue higher, but we'll define 5167 right here as a higher low. The reason I'm not going to plot it as the target, yes, it's nice to be above it, but I wouldn't necessarily try to go long above it because in theory, when we're having a reversal to the upside, I need to target lower highs to the upside. If I'm targeting previous higher lows to the upside, it's kind of doesn't work. It doesn't make sense. We're not really going to the downside yet, at least temporarily. So with whatever I have here on the daily, I can only just pay attention because the texts aren't telling me too much of direction. So I'm now going to pay attention to what are my moving averages saying. So my 20-day is 5130 and my 50-day is 5118. Right away, my assumption is because they're so tight together on the daily, if the daily candle manages to breach below the 50-day of 5118, I could see the possibility of us coming down towards 5035, around 5,000 is a stretch, possibly 5035. I have to point this out now. Let's blow this up on the weekly. What do you know? The 20-day on the weekly of support of 5033 is similar to that daily of the 100. Cool, cool, very interesting. Right away, I'm thinking if we dip down to 5033, we might attempt to buy with a stop at 5,000. What are the odds they're going to sink this? Also, something I want to point out, something that Powell was talking about last week, is if we see a downtick in the labor force, that could be a call for cutting rates. NFP gave us just that, hence the reaction of this massive squeeze to the upside, and as well as the technicals invalidating that bear flag pattern to the downside on the higher time frames. And we saw this squeeze up here, and now this is where we are. So again, cool. We understand that 5033 may be a favorable level into this week. Okay, we'll leave it at that. Let's go back to the daily. So that's support. Again, this is a little bit too tight knit for me. I can't be like, oh yeah, 5250, where that's the lower high we come to. I don't know that. We have to break this down more now to the 4 hour. But again, keeping in mind 5130, I guess, as the first support, 5118 on the daily might confirm we come down to 5033. Everything between 5033 right now, and I would say whatever the lower high we identify on the 4 hour or the 1 hour is not a tradable zone. Unless you're already long from last week, you are more or less guessing or trying to time what's going to happen here. So let's take a look at this on the 4 hour now. Okay, cool. Very nice. I see a little bit of an uptrend channel here now. Let's focus a little bit here. We finally squeezed above this lower high of 5123. I would plot it, but I won't because the base that we formed of a support, the session highs were right here. Ironically, also previous higher lows. Cool. I'm going to leave it there. What's that? 5153. Okay. We'll use that as the meter. So if we remain above 5153, our assumption is we're going to come up to 5213. Now, you could take a chance with a stop at 5135. That's your 200 EMA. Notice our 20 is starting to cross over on the 4 hour. We have that support. You could take that bite and you target 5200. I think that's coming. I definitely think so, but I can't have that strong of a conviction because I've been wrong before, and if I'm wrong, I'll be wrong, but I'm definitely leaning to more upside. It's just, last week I was really thinking about what was it about the entries that, I timed them the way I did. So in this case, I changed up my thinking a little bit. If we are to go long, I'm going to focus more on the supports that we see on the daily, on the weekly. So if we see 50.33, right away, I'm telling you, we're going to go long. Everything here in between, I don't want to guess. And that leads me to my next move, where if we can get that breakout of 52.14, we'll probably go long over there. We can target easily towards 52.50, 56. That was our previous lower high. That was also a previous all-time high when we were working our way up to that area. So that's a perfect target to the upside with light risk because, okay, if, you can set your stop at 5200 or 5198 and, if ES pierces below it, okay, you were wrong. It's still range bound. It's trying to figure out what it wants to do here. But here's the other thing. Let me see, 51, 56. All right, let's plot that out. Let me just extend this to the left. Here's the other thing that I'm thinking about it, but I'm not very excited to act on it if and when we get there. Maybe if it makes sense and there's momentum and it looks right, but something about 50 to 85 to 5309 is dicey area. It's probably going to try to draw in a lot of bids either to the upside or to the downside. I'm really not surprised if when we see 5300, 5333 again, I wouldn't be surprised if we see a ton of traders trying to short it, call it the top, and that we're going lower. In that case, that's why we have our alert specifically above 5333. If we can get that close at least on the 1 hour and see that it holds a support, we can go long and have a proper stop, slightly below 5300. That would be a fair, I think, shot at momentum rather than trying to target these levels here because where would you put the stop if you enter at 52.85? 52.50? So, okay, so you're risking 30 points to make 30 points or 40 points. Basically, the risk to reward ratio for me doesn't quite make sense here. So it's just personally me, I would be careful in this area. I think your last, attempt at maybe going long is if we can hold 52.57 and you ride it out towards 5300, 5308. Well, 52.85 has to break on the daily first, but again, dicey area. Just saying. In terms of downside now, because we can't be ignorant about that, right? We have 51.35 and we talked about it. I would say, I wouldn't focus too much on anything breaking down here. I would look at this as the ultimate kind of downside alert that if we break below 50.36, 50.33, which is our 20 EMA on the weekly, and our 100-day EMA on the daily, if we break below this, okay, maybe we could take a stab at shorting the lows. But again, see how I said that? Take a stab. You're still taking that attempt. So is it worth it for us to short at 50.36, have our stop, about 30 points above, because 50.60 was an important level. Notice how this candle, we wicked right down to the support it held, and then the candle closed above it, and we had this massive sword job. So I think that's interesting. But again, where are you putting that support? 30 points out, and what's your first target? To be realistic, you're targeting about 10 points, 50.22, and then you got to target really the lows of 49.62. Well, 5,000 first, excuse me, 5,000 first, then below 5,000, you could look at 49.60. We need at that time something to make sense. The VIX has to be soaring. There has to be some kind of turmoil in yields. There has to be some kind of turnaround. FYI, the 2 year yields, I think they're turning around. I think they're getting a little bit of a drop in them. So that's going to be important too for us. With that said, 50.33. That's my absolute support for this week. And, I would really I wouldn't even try short personally. This is me just personally. I would only be shorting below 49.63 because I know for a fact we're going for that 10% correction towards 4,800. Here, it's timing. I have to, I don't want to force anything here. Again, here, this could be an attempt to go long, but you're putting your stop roughly where? 30 points. Yeah, you could put a stop 30 points below your entry here, and your first target is 40, 50 points to the upside. So you're risking 30 points to make 50. That's not bad. It's not it's not great, but it's not bad. But still, it's an attempt. So we're going to be sitting tight for now. I don't even need to go down to the 1 hour because it's not really going to tell me anything new, right? So I'm going to keep this as support. I'm going to keep this as the 51.53 level. Let's see. This is going to be our target to the upside, 52.13. I'm definitely going to set an
What's up,
alert.
Nicky? Can you hear me?
Holy. Yeah, hold on. Hold on, brother. I'm doing the overview. You scare the crap out of me. Your user,
Oh,
your
sorry.
voice is, your thing was loud.
Oh, okay,
Man,
sorry.
you threw me off. No, you're good. You're good, brother. Just let me wrap this
Okay.
up and
All right, go ahead. Wrap
yeah.
it up. Sorry, I was just talking to Carlos. I was just say, what's up, guys? I'm just checking in. I just got settled here in Colombia now, so I'll let Nicky get back to the show. All right. I'll see you guys tomorrow.
Love you. Later.
See you guys.
With that said, all right. I'm gonna set my alert at 51. Yeah, that totally threw me off. Sorry about that. 51, 52.14. Jeez. Okay, back on track. 52.14. All right, because I would feel comfortable putting that stop again at 51.99, 95. Okay, you're risking 20, 30 points for a nice, a nice 40 point move, 50 point move to the upside, maybe 20 points risk. Eh, With that said, that's enough with ES. We covered, I think, all of that. Moving on to NQ. Weekly, let's go ahead and clear it up. And it's the same song and dance like with ES. Let me just remove this. Okay. Now, NQ was a little bit more aggressive with it dipping and closing below the 20-day EMA. But again, the next 2 weeks we managed to hold above it. So if and when we do pull back, I want to see how this 20-day on the weekly is going to hold up. And that will be at 17,608. We'll see. I'm going to also plot the floor for NQ at 17,110 because I know for a fact below the lows of 17,110, we're applying the same kind of concept that we did with ES. What's a 10% correction off the all-time highs? For NQ, 10% off of 18,709 lands us at 16,850 roughly. So that's going to be a previous higher low in this area. Maybe it's going to be a little bit more aggressive and we come down to the 50-day EMA, which is 16,414. But with that said, let me go ahead and plot this floor here on NQ. That's going to be the lows of 17,113 again. Because we know that breaks, we're going lower. And in terms of going higher, same thing, 18,709. That breaks, we know we're going higher. Let me go ahead and change it up to yellow. I do that for direction because red is really for the intraday stuff. Okay, let's make a note. The 20-day is at 17,608. Okay, the daily now. Same song and dance. So our 20-day is over at 17,850 and our 50-day is at 17,880 basically. Okay, our high was right here. We're going to have to break this down to the 4 hour. Our 100-day EMA lines up to 17,510, about a 100 point disparity difference than we had with ES. All right, I have to break this down to the 4 hour. Again, same thing. The bear flag got invalidated. We could not break these lows to make lower lows and continue breaking down towards uh, the lows of 17,113 because below that, again, we're going towards that correction. So I wouldn't want to short unless we're in that area again. So I'm going to create an alert right there. And let's point out the lower highs that we got above and we're holding above, which are at 17, basically 18,000. Really, it's 18,000. Okay, so as long as we hold 18K, we probably will be attempting to come up on this wick, which is over at 18,132. above 18,132. The real target is going to be the lower high of 18,350. We could go long here, but again, you'd have to have a minimum of probably a 300-point stop if you're going up there, which creates a 1-to-1 risk to reward ratio. And the reason I say that is because unless we can solidify that, we're holding this uptrend here and we can support the supports. If we dip, that's fine. That's going to be maybe a nice entry to buy on a dip, or we see another, attempt of us breaking out of these session highs on the lower time frames. Cool. Maybe we attempt it there, but most likely it's going to hold around here. Again, I don't know if it does hold around here. You're still taking an attempt on timing by going long here because you don't know if it's going to come down here. And again, looking at this on the weekly, it's not quite out the woodworks. This does look very bullish. There's definitely a lot of bull bids coming in here, and if we can again stay above this candle, we may go higher. But what are the odds of that? How do we know with a certainty that happens? For now, while we don't, we're just assuming what our best probabilities are in terms of direction, when we reach certain levels, basically. So again, with that, the 20-day, I'm just considering that 17,608. If for whatever reason, on some noise, on some news, 10-year bonds or the 30-year bonds spark some kind of, volatility. If we still remain above 17,608 or 600, I'm definitely considering buying in that area. And then if we really get back above 18,350, I would feel a little more comfortable going long and targeting the lower highs, really 18,709, as long as it holds. Going back to the 4 hour, 4 hour, you know, above 18,350, I'm going to have to mark off this area. But again, it's going to be the same theory that we just went over on ES with 52.85 and that 53.08 area. Our lower highs are basically at, one second. Our next lower highs above 350 are at 519, and your next possible available support is only 200 points away, so that creates a 1-to-1 risk to reward ratio. Do we want to chase that? Do I want to chase that? No, not really. I mean, if in the moment it looks good and there's momentum, maybe, but most likely not. I want to go for something clearer. And again, I would like to get in on a dip more so than a breakout. I do like trading breakouts, but I've been beat up pretty bad last week by attempting that. Because what would happen is we'd get in on that breakout, it would go, it would be green, maybe we grab some insurance, then the move would entirely reverse towards our supports, catch some bids up there, back up it goes, and it goes higher. With that said, that's why I'm kind of playing it by ear. Yes, we're above these supports. If I wanted to swing, I would. I actually am long right now on NQ from last weekend, and the stop would probably be again at 17,550. That was the original breakout, that we got above on the intraday, and then we never looked back. And the fact that we're above the lower highs of over here of 17,950 and 18,000, it's like, how are you going to short this? Why would you short this? This is, look, we just got above, our EMAs of 200 and the 100, the 20s crossing over the 50. And the biggest thing for me was the fact that the bear flag could not continue lower. This was the big one. I really wish that on Wednesday, instead of kind of rushing in on that FOMC dip back over at, I believe it was right here. Yes, at 17,650, right around here. Really wish we waited that off because price came down to 17, what, 300 or 400? Or I'm looking at the wrong one. Oh, I'm looking at this. This was the FOMC one. And I wish we waited because imagine we had gone in at not even 17,400 because that was a little bit humanly impossible, but around maybe 17,450, maybe whatever. With that said, I'm more considerate this week and I'm definitely more attentive. I know that we're breaking out. Again, the macros are pointing to the upside. I'm going to be looking for those dips that we identified on the daily and on the weekly. And I'll do my best not to really try to kind of get in on Momo between these ranges because you don't know. The fact that I'm giving you two different scenarios at once or three different scenarios at once is one of my rules. If you see three different scenarios at once, you shouldn't be trading it. But for example, let's say I pull this up on the daily. I know if we come down to 17,850 and the daily stays above it, I'm going long for sure. Or if we don't go long at 17,850 because we're nervous that the next candle is going to break down, we could always wait for it to retake the session highs of 18,000, whatever the wick is, 18,064, and we can always go long there. Sure, we'll have to risk, 70 points to the downside, but our upside is going to be so great because we're targeting roughly 250, 300 points to the upside. Now that's a setup I can get behind. Um, you know, those two setups, either the dip or, the dip and then we break out. So either one of those. Again, to go long here is an attempt. Unless we're ready right now to sit on a 200-point swing, which we're not, I know that, we're not doing that. Okay? So with that said, that's kind of what we're looking at with NQ in terms of upside. And again, I don't want to go long anywhere. We might, I'm not going to say I don't want to because things change. Life, markets move, things happen, momentum comes in, you get confident, you see probabilities, and you go for it. But looking at what the action and the history was like here, I would much rather go long at 18,709, and have a proper stop over at, even if it's 100, well, I won't make it 100 points, but 70, 80 points. And, let's say we get a pop, we enter in at 18,709 and we pop to 18,750. You you bet we're moving that stop loss to break even. So it's worth that risk on that Momo. Here, I don't want to try it. I would much rather see that dip, buy that dip, and then we continue higher. With that said, I guess let's take a look at the dollar really quick. Yeah, I was looking at the Russell, but I don't trade it. I don't like it. All right, dollar. Oh, what a beauty. Beautiful. All right, get us below here. Get us below here and we're going to soar. Rate cuts come. Dollars at 102.50 or lower. Ah! All right, that's just hypotheticals. But with that said, this looks good. I think, really, if the dollar can come down below 103.80, maybe that's a stretch, but anything is possible. I think that will be great for equities to kind of continue heading up higher. If the dollar starts to break above 106, 50, well, I guess that's directly in correlation with inflation. With that said, I think there's going to be rate cuts. I think they're coming very soon. And why else would the market react like that on those bad NFP numbers? Make it make sense. With that said, also, I believe VIX, right? I saw a lot of guys yelling short, short, short last week. Well, again, given it was a bear trap. Um, VIX, look at this. I mean, we're at 1349. We're back in the chill areas. Over the weekend, also, I read something along the lines of possible Hamas peace negotiation or ceasefire, possibly. It's unconfirmed. I don't know. I read it from Walter Bloomberg. Shout out to him. But we'll see. There's got to be, we got to put things together. And with the VIX being in this chill area here, if we start to fill this gap towards 13 and end up, kind of hanging out in the areas of 1180 again over here below 14, great. What that tells me is every time I'm going to see a dip and the volatility on the VIX, for example, can't go higher, I'm going to be more inclined to buy that dip. Now, again, just to reiterate, the shaky territories for VIX are at 18. Above 18, it's, be cautious, be careful. When you hit 20 and start going above 20, that's when it's like, oh no, there's something wrong. There's, fear selling, and maybe, the beginning of some capitulation. Usually, also, a capitulation is a strong word that gets thrown around, and I feel like it gets thrown around loosely. From my experience, when I've experienced capitulation in the markets, when people are like, oh my God, they got to get rid of it, the VIX is at 35. With that said, that concludes the futures overview. I hope you have a great trading week ahead, and we'll see you into next week. Cheers.